I'm Mary Schuster, Chief Product Officer and EVP of Regulatory Affairs with RamQuest, here to talk to you today about the new closing disclosure form from the CFPB. Page 1 of the closing disclosure presents an overview of key loan information that the CFPB views most important for the borrower to understand. 3 important elements included on the first page include the interest rate, monthly payment amount, and the amount of cash needed for closing. The layout of information on page 1 matches almost identically the first page of information on the initial loan disclosure called the loan estimate. The borrower is to have received their loan estimate, or LE, within 3 business days after making their loan application. This continuity is intentional with the goal of bringing clarity to borrowers and highlighting the most important facets of their loan terms. In the top section, we see basic transaction information including closing date, property address and sale price, borrower and seller name and their address, and loan information. In the loan terms section is where the loan amount, interest rate, monthly principal and interest amount values appear. After each is a yes or no question of can this amount increase after closing. If yes, there will be more descriptive language. If no, there is no more language needed. Next, we see fields for does the amount have a prepayment penalty or balloon payment feature. Again, if yes, more descriptive language will be added. If no, the section is complete. For the projected payments table, this is the first of several areas of the form that we see will expand or contract based on the specifics of the loan being disclosed. If, for example, it is a 30-year fixed interest rate with no mortgage insurance, there would only be one projected payments column. It would show years 1 through 30 with a principal and interest amount fixed for that 30 years. If there was an impound account on the mortgage, that would be disclosed as well. In this example, we are looking at a 30-year fixed mortgage that does have mortgage insurance. We see 2 projected payments amount, years 1 through 7 with the MI included, and then years 8 through 30 with the MI discontinued. Your lender will calculate and advise as to the information that should be included here. You just need to be aware of which scenario your CD is reflecting. This section can expand to include up to 5 projected payment estimates. If there is an impound account for the escrows, the bottom section of the projected payments table will show how much is being deposited into each month and which payable expenses are included in the impound. In the closing costs section on page 1, closing costs is a total of closing costs less any lender credits. The breakdown is available on page 2 for more detail. Cash to close is a quick reference for the amount of the wire for the funds that the borrower needs to send in for their closing. The details of how that number was arrived at are available on page 3 of the CD. If this number is negative, this is the amount of cash back that the borrower will receive as a result of the closing. Now that we've had an overview of page 1, let's move on to page 2, where the details really start to emerge.